What's up, everybody? So welcome to the channel. This is the channel Davo. We talk about Italian real estate. First thing I want to do here is apologize to anyone that was trying to wait for the live video about 2 days ago, 2 days ago, that I was trying to do this video that day and it just didn't work out. The technology was betting against me and I decided that this was going to work out better, just making it, uploading it in this manner. And so I'm going to kind of act as if this is still live. It's going to be the same presentation, but nobody's going to be able to ask questions. And that was kind of the whole goal, was to get some interaction from people. But you guys are doing a really good job of commenting on things you like and sometimes even asking great questions. So without further ado, I don't even know where that phrase comes from, but without further ado, let's get started. This video will be the first video I do about taxes since the spike in subscriber base. So we'll see who has an interest in this topic as we talk about taxes for investors. This is all from the point of view of an individual who owns property outside of a business entity. In past videos, I covered tax obligations for residents in 2 separate videos which differed based on whether the house was a primary residence or a secondary home. Today we're going to cover the scenario in which you decide to rent your second home, since the previous videos were about taxes due on mere ownership of the property, such as property tax and other community taxes. What other taxes are there when renting my home, you might ask? You guessed it, today we are, or maybe you didn't, today we're talking about your options regarding income tax. As a recap about secondary homes, if you haven't or are ineligible to request the prima casa tax benefit, it is considered a secondary home. Along with that comes the obligation to pay IMU and TASI. Now, for a better explanation of what those are, go ahead and check out some of the other videos in the corner here. Some communities don't require TASI, one example being my own community. IMU, however, in property tax is paid to the community on every secondary home. The prima casa benefit makes you exempt from paying both, so it's kind of a big deal. I believe we use the example of my home if it were not considered a prima casa, but which it is. I can do you one better this time and give you a practical example since I'll be paying it this week. 1 year of property taxes for a 110 square meter apartment in a smaller community in Lombardy, Italy, came out to be 480 euros. Let's turn down that volume. Before I get into this, I do have to establish that I'm sharing from personal experience and I'm not in any way, shape, or form a tax professional. Please do not think of me as one. I will do everything I can to inform you as I become more informed, and perhaps this is a good time to mention that law in Italy seems to change with the wind. Not joking. Every day I feel like I wake up to some complicated law reform. If we have time, we'll actually talk about one regarding this topic since we are nearing 2020. It's only natural they change laws every year, right? Alright, let's not waste any more time. Let's just get to the point. When setting up a secondary home as a rental property as a resident, you are given 2 choices, Irpef and Cedolare Secca. I always say that wrong. Now, what is Irpef? Irpef stands for the Imposta sul reddito delle persone fisiche. For those who don't speak Italian, it basically means tax on the earnings of an individual. I'm really starting to feel like Brad, learning to talk Italian. Anyone seen Space Ghost in the past? Irpef is a tiered structure, much like many other countries, where you consider your rental earnings in addition to any wages you receive from other sources. If your earnings are significant enough to move you into a higher tier, your tax burden will be increased for the portion that exceeds the previous tier. Sound familiar? The tiers for 2019 were 0 to 15,000 euros at 23% tax, 15,001 to 28,000 euros at 27% tax, 28,001 to 55,000 euros at 38% tax, 55,001 to 75,000 euros at 41% tax, and anything over 75,000 euros would be taxed at 43%. Alright, so the alternative is Cedolare Secca. So what is it and why would I choose it over Irpef? From what I can tell, it has been a policy at least defined this way since 2011, which basically allows you to consider rental income separate from income from other sources. The benefits are that it is taxed at 21%. So at any level of whatever tier you're in, it would seem the wise choice, since the base rate is at 23% on the Irpef option. Especially in cities like Milan that are incentivizing investors to offer rental properties by taxing a mere 10% of the rental income gained. Milan is a special case, along with many other communities defined by special criteria. These are communities with high demand of housing, high-density communities, and communities that were considered in a state of emergency ever since 2009. Don't get too excited, there's a catch. When choosing Cedolare Secca, you are required to offer your tenants a 4-year contract, renewable to another 4, without the possibility of raising rents during each 4-year period, as long as the renter has not violated their contractual obligations in any way. When choosing this method, you'll really want to make sure you're planning 4 years in advance, since you'll be locked in, but being 2% lower than the base rate for Irpef, it might just be worth it. I guess we'll have to see. For the apartments that we are renting right now, we have chosen the Cedolare Secca option. Our properties aren't in an incentivized zone, so we pay 21% on our gross rental income. The more properties owned, the more advantageous this offer really is. Let's create an example of a property producing 1,000 euros of income monthly. A typical entry salary for the banking industry would have already placed you in the 38% tax range. Adding 1,000 euros per month on top of that probably wouldn't bump you into 41%, but would already be 15% more taxes paid than taking the Cedolare Secca option, 26% more in a community like Milan. Following Irpef, if we were to raise rents by 4% each year, we'd initially start off with 1,000 euros. The second year we'd charge 1,040 euros. The third, 1,081 euros or just over that. And fourth, 1,124.25 euros. I'm no math wizard, but I don't think that the buildup of rents finally reaching an extra 124 euros per month during the last period is even close to comparing with the savings of 150 euros over a period of 4 years. Assuming we're in the 38% tax bracket anyway. Let's look at a Cedolare Secca on a yearly chart. We have year 1. I've kind of broken this down into multiple columns. You can see each year on the left side, you can see how much you've earned, 12,000 euros each year, because we're not changing rents. In the next column over, you can see how much taxes would be paid based on 21%, based on this Cedolare Secca 21% tax rate. So 2,520. And each of these columns is totaled at the bottom. The last column will show what you keep, your net cash. In that situation over a total of 4 years, you'd make 37,920 in this specific situation of earning 1,000 euros per month and paying taxes on it through Cedolare Secca. Now, let's see what Irpef would look like. But just for fun, let's compare Cedolare Secca to the lowest rate here of 23%. All right, so we have a similar chart here. The first year, each year, however, changes slightly. We start with the same 12,000 euros in that year, and then in the second year, 12,480, third year, fourth year, on up to a total of 50,940. 50,940 is obviously more than the previous situation. Now let's look at our taxes. We have a total of 11,716 euros and 20 cents, and so you can see we're also paying more taxes. Now let's look at our net cash. If we were in the base tier of Irpef, for this specific situation, raising 4% a year, starting at 12,000 euros, we would have left over 39,223 euros and 80 cents. If we were living on rental income alone, at least staying in the 23% bracket, it just might be the better pick. Let's look at the total cash difference between the first two Irpef brackets compared to Cedolare Secca. This is just a pretty basic chart showing the 21% rate of Cedolare Secca versus the base rate in that second column, first data column. The last column there shows the Cedolare Secca 21% versus the next step up in that tier, 27%. So this actually, now that I look at it, actually already has an error because you wouldn't consider every dollar in the 27% bracket. It's just the amount over 23%. Over that initial, how much was it? Over that initial 15,000 euros. So between 15,000 and 28,000 euros, if we were to make, it really depends on how much we're making. Anything over that would be taxed at the 27% rate instead of 23. So it's not to this extreme that I'm showing you here right now. But the message I wanted to portray is that you really need to do this calculation for yourself on your home and understand the differences between the Cedolare Secca option and the Irpef options depending on your tax tier. Okay, obviously a lot of you are probably capable of doing this, and I could get into a whole spiel about saving money and investing it at like 8% interest return, and it could get seriously complicated. But I'm not going to take the time for that right now. That's not what this video is for. Looking at it for face value, unless you're near the bottom end of the 27% tax bracket, or at least in 2019, you'd probably save more money by choosing Cedolare Secca. Remember that that was increasing the rents every year, however. Now, personally, I don't sit there devising ways to increase my rents annually, and perhaps it's money I'm leaving on the table. For me, a renter that happily pays their rent over multiple years keeps me stress-free, and as a reward to them, I'm happy to not raise any rents for a 4-year period. To wrap this up, I'm going to share a tidbit of info that could rattle you a little bit, at least towards from long-term rental contracts. It's not my intention to dissuade you. Obviously, I rent properties this way myself, but it's best if you know before jumping into anything. By law, when you establish a rental contract through the Agenzia delle Entrate, which is like the IRS for Italy, you as property owners are responsible, and not just responsible, obligated to pay your income tax, whether or not rents were actually paid. Okay? Yeah, you heard it right. Even if your renters decided to rip you off, you'd better pay your Irpef or Cedolare Secca based on that contract that you established, as if you had received them. Later, with substantial proof that you never were paid, you can request a reimbursement of funds. But from what I understand, you'd better ante up the money initially. With that said, all that means is that vetting your renters is extremely important if you choose to go the long-term rental route. As a last thought, right now, there is a discussion on what the tax tier will be for the year 2020. I believe it still hasn't been decided, but it has been proposed to change from a 5-tier system to a 3-tier system. It would look a little as follows. So there'd be no tax obligation for up to 8,000 euros. That's not really considered one of the tiers. Between 8 and 15,000 euros would be taxed at a rate of 27.5%. From 15,000 to 28,000 euros would be taxed at 31.5%. And finally, anything over 38,000 euros would pay a rate of 42 to 43%. This is information from the proposal sent by the Cinque Stelle party here in Italy. Funny how it can be vague by 1% for the highest tax bracket. 42, 43, Anyway, I did want to point out the very last thing, that between 2019 and this proposal for 2020, the last tier was 75,000 euros, and they're going to drop that so that anyone receiving over 38,000 euros would pay that exact same rate. I'm going to keep my opinion out of this video. However, I will point out, in the situation you own a property that makes less than 666 euros, I think that's 8,000 divided by 12, you won't be paying anything on rental income tax following the Irpef 2020 route. Seems like a pretty sweet deal if you think about it. Good luck living in Italy for less than 700 euros though. To me, it seems any upper average paying job or dual income household will most likely be paying 42 or 43% taxes in the upcoming year. I wonder if we get to choose one or the other. I think I'll pick 43%, just to be the only one who did. When I hear more about tax reform, I'll make sure to fill you in on the details, but please keep coming back with great questions and watch out for the next video. It's going to be a good one.